focus on today. Weak quarterly performance coming in from KRBL in their fourth quarter. The company's margins came under pressure due to a high input costs. Also, exports saw a dip of almost 18% as a result of which the stock lower by in high single digits in today's trading session so far. Ashish Jain, who's the CFO of the company, joins in now. Ashish, there was a 27% growth in revenues for FY23. Margins were close to around 18%. So let's keep it simple. What are you targeting for FY24 in terms of revenue growth? And do you think the margins will cross that 20% mark in this fiscal?
Yeah, so first, thank you and good to join. So, just as a policy, we don't give guidance, but our outlook on the overall rice market, both in India and overseas, continues to be strong. I think talking about the domestic market, we continue to see strong demand coming in both from basmati and non-basmati. Exports, as you know, India has seen a record year in terms of basmati exports. We expect that positive trend to continue both in terms of volume and value. So therefore, overall, we see a good year ahead.
Okay, so when you say overall there's a good year ahead, Ashish, what can we expect? I mean, I'm not looking for, I'm not pinpointing to the numbers, but in general, are you looking at a double-digit growth? Is there a 20% growth that you can do? Because this time the revenue growth was almost 30%. And given that demand trends are positive, what would you be a ballpark doing in FY24?
Sure. So I think FY23 is an exceptional year. I think both in terms of a lot of pent-up demand coming in and also, I would say, record high prices. So we do see some of the trends letting up in FY24, but overall we see a positive outlook. I'm afraid I can't give you a specific number around that.
All right, let's talk about individual parts of your business then. In terms of exports, we did understand that there were some pending realizations which will happen in the first quarter, the quarter that we're currently in. Can you tell us what is your target in terms of exports for the first quarter and the year as a whole?
Yeah, so I'll just explain. So usually, we dispatch goods, but we recognize revenue only once the payment is received. So in this case, and this is a phenomenon that happens at the end of every quarter. However, the difference as of March 31st is that the total value of goods dispatched, but revenue pending recognition is in excess of 400 crores, which is twice the usual average. So most of this revenue we see, we are hoping to recognize in the current quarter. And therefore, we expect quarter one exports to be in the similar range as quarter three, so upwards of 500 crores, as against around 330 crores in quarter four.
Okay. There are two expansions that are coming on stream in June, both in Gujarat and Karnataka. What's the kind of revenue potential that you see from them?
Yeah, so slight correction there. So we see the Gujarat plant coming on stream in the current quarter. Karnataka, the project is progressing, but it'll take slightly longer. So out of the two, the Gujarat plant we expect to go live. That plant is going to focus on basmati and primarily on exports. So that should add to the performance in the current year.
All right. And what about the overall potential revenue from that?
Yeah, so overall, we are at various stages of developing three projects. One is in Karnataka, the other is in Gujarat, like you mentioned, and the third one we are targeting in MP. So collective revenue from these three projects we expect at around 300 to 400 crores.
Okay. I'm sure you do understand that, the stock has been under a bit of pressure lately. In fact, even today, the stock is down about 9%. I think the market is a bit concerned about the gross profit margin, gross margins and EBITDA margins being under pressure. You addressed briefly the input cost issue, right? But do you think that the margin band is something that, the new normal perhaps is about 10 to 11% compared to the 16 to 18% you used to do earlier because of the challenges that you're facing?
No, I don't think the margins are permanently getting reset. There were specific reasons for why the margin got affected in quarter four. A couple of them I can name out. One is that we had higher share of lower margin SKUs getting sold. Second is that, if you look on a year-on-year basis, our basmati average cost has gone up by something like 24%, while the realization increased by 17%. So that'll have its obvious impact. Even vis-a-vis Q3, the average basmati COGS has gone up by 2.5%. And third, there were some one-off items related to some non-basmati export that we had done, which broadly account for about 24 crores of additional cost that is reflecting. So these three things together, one is higher proportionate sale of lower margin SKUs. Second is higher average COGS on basmati. And third is some exceptional items that are coming in as one-time costs have caused a temporary dip in margins. We see this getting restored to a large extent in Q1 and also hope to maintain the range that we're seeing for the full year as a whole.
The range being closer to 18%, is that correct?
That's right, yeah.
All right. And what about the non-basmati business? You spoke about it briefly. You had a target of close to around 500 to 700 crores coming in from the non-rice business for you. Is that on track? How much did you do in FY23? And the Unity brand, how much did that contribute in FY23? What's the target for FY24?
Yeah. So, first, I think the number that you mentioned is for overall non-basmati as well as other products. So the progress around non-basmati is that, like I mentioned, we are developing a specific plant for non-basmati in Karnataka. Against that, we are targeting higher revenue as compared to the last year. I can't share specifics, but you will definitely see higher non-basmati branded revenue coming in FY24. I think that's the second point. Sorry, what was the third point that you're making?
Unity brand.
Yeah, so Unity, if I recall correctly, I think that brand is close to 1,000 crores or 800 to 1,000 crores in terms of annual revenue. So that's growing very well.
Okay, all right, we leave it at that. Ashish, thanks a lot for joining in and giving us a quick take on the business and the way forward for KRBL. Appreciate your thoughts. Let's take a short break. Up next, we have a special segment, Inside Edge.